Hey, what's up, everybody? It's Omari. It's Monday, January 12th, 2026, and the grand chessboard is moving faster than most people can keep up with. And what we got here is that the Fed chair is under a criminal investigation. Gold just smashed through $4,600, and the United States debt is sitting at a staggering $338 trillion. So the problem here is that while the big banks are pouring billions into private nuclear data centers for AI, the average family in America is being told that the economy is just fine. But you see the part-time jobs and you feel that 10% dollar slide, which means that everything you buy, including groceries, is getting more expensive. So we call that inflation. So the concept is that in this environment, in this climax, we have to decide whether are we keeping our savings in the public pipelines, such as the banks and the stock market, where the government can tax it or the feds can devalue it? Are you building a private financial system for yourself without going through the public pipelines? And if there's a way, there's a will. So what we call this is the zero is your hero. So the 0% floor. So the NASDAQ chart, the S&P 500 is sitting at record highs. And the structural, so we can see that the stock market is at its all-time high. This is this all-time high. It did this last week right here, all-time high, and then it came back up today. How is that possible? If we as a people is looking at the economy, we saying to ourselves, and our intuition is kicking in, that the economy is not fine. But with an IUL to protect you from the stock market crash, because what the Feds is doing, they're keeping the stock market in. So if you have an index universal life, you can capture the growth of these tech giants, these tech titans. But if the system glitches and the market drops, you have a 0% floor. So you lose 0%. And that's a tax hedge, because with the $38 trillion in debt, taxes have to go up someday, one day in the future. And who will be paying for it? Because it seems like these tech giants, they get more funding and then they up in their prices and then they're putting the taxes on us because we're paying as consumers for those high prices, which we're putting more margin or more money in these tech giants' pockets, and they're able to pay off their taxes while we're being hit with a hidden tax, which is called inflation. And an IUL allows you to grow and access your money tax-free through a policy loan. So if your money can be tax-free through a policy loan, you're exiting the government tax glitch. You're betting on yourself to make sure that your family is secure. Because if you got your money in these public pipelines, your money is not keeping up with inflation. Even though you say that you got a 3% raise at your job, that doesn't counterbalance inflation if inflation is growing around 6 to 10%. And then your savings accounts, they're not giving you that much interest. So let me break everything down and let me tell you what's happening micro and macro, God's eye view and street level view. So the geopolitics, right? The battle for the Arctics and the South. So Greenland, the NATO tension. So over the weekend, the UK and Germany decided to deploy NATO forces to Greenland specifically to calm the US threat. So Greenland is now viewed as the next great hope for the oil industry, and Europe is terrified that the US is moving to secure it as a private resource. Because the thing is that the United States, they're in the age of self-reliance and they're becoming self-reliant. So what they're doing is that they're cutting themselves off from other countries who does not benefit them and doesn't apply to the United States personal interests. The United States is going to cut the head off the snake. But who's the real snake? And if these other countries like Russia or China is not agreeing with America and we keep on weaponizing the dollar, so all those other countries, what they're doing, they're protecting themselves. They're creating private reservoirs for themselves. They creating private pipelines for themselves. So the dollar won't de-dollarize and inflation won't hit their economy because every time inflation goes up, the other countries suffer. So they're tired of the United States mismanaging the budget and they also suffer. So what they're creating their own public-private pipelines and they're getting out the United States, like the petrol oil, they want to get out from that. That's why the United States had to seize Venezuela because China and Russia was basically their business partners. So United States didn't like that. So they felt like Russia and China is in their own backyard and there was a threat. So the United States had to cut these countries off. And now what the United States is doing, they're creating their own private infrastructures. That's what they're doing. And the other countries, they're scared because they want to protect themselves. But the United States, they're looking out for their own best interests, right? So we see the Venezuela, the resource threat. Trump has signed Trump has signaled a very strong options regarding Venezuela. And Canada is nervous, fearing that they are next, that they're the next target for their resources to be extracted by the US, right? So let's look at commodity, gold, silver, and the dollar. So gold historically had breached its high. Spot gold hit an all-time high of $4,563 on Sunday, eventually crossing the $4,600 per ounce. So this is the world's gloom signal. This is the world's gloom signal that the dollar is losing its grip. And then silver records, right? Record high. So silver smashed through the $70 earlier in the week, making a 140% rise for the 2025 and continuing in 2026. So as traders scrambles for physical metals during the Powell crisis because the de-dollarization and the dollar, the DXY. So the US dollar has shed nearly 10% in 2025. And rumors is that interest rates will stay afloat due to the Powell's investigation, which is causing the dollar to eyeball the level against the yen, right? So let's also look into cryptocurrency and AI hardware. So Bitcoin pivoted around 93,000. So Bitcoin popped above 93,000 as crypto bros jumped into 2026 with enthusiasm. So this is the private pipe of wealth that the Titans are using to bypass the Fed's chaos. When we look at inflation, cost of goods goes up. So when you invest, your money goes up with the cost of goods. That's why investing is important. And by the way, this is not financial advice. Then we got Intel, the AI dominance, right? So Intel jumped 10% last week, over 10% last week, after its 18A processor were hauled as the American brain for AI. So this is the only things that's keeping the tech stocks afloat as the S&P 500 hits record highs amid hiring. So the bigger picture is that the Fed is under fire. Start with Jerome Powell. He's under a criminal investigation. So that's a macro chaos driving today's volatility. And then we got the debt clock. So the $38 trillion US debt is causing a lot of noise and people are getting nervous. Investors are getting nervous. The countries are getting nervous. So we can see that earlier today, the market popped, right? So the NASDAQ 100 or the S&P 100, this is what I trade. And this is the New York section open, 6:30. So I'm in Sacramento, California, Pacific time. So New York, the East Coast is 3 hours ahead of us. So I have to get up before 6:30 and my levels is already planned out the day before, but I just go through the financial news and just getting ready for the market to open. So this is what happened. The New York stock market opened up and we got this strong buy. Buyer stepped in. It was very strong. Let me delete that. So these are my levels. So you can see this is a support level. So if price didn't bounce off this level, I might have had expected that price will go down to this level, right? because we'll be in a downtrend. But you got to remember, the Feds is keeping the market open. And all this good news and great news for the market that's coming out is causing the S&P 500 and the NASDAQ 100 to go up, especially when we hear about these tech stocks. It's going up. It will go up. And we don't know how long this will stay up. So what happened was that I got in on a box because I use indicators. So you can see these lines. You can see the green line, the red line, and then we got the white line. So eventually later on, I will assume, based on the trend, that we might make a new higher high, but what goes up must go down. So this is the higher high. So if I'm looking at this as a trader, the volume cooled down and I'm looking for price to probably test this level, this support level again. So I stayed in this trade. Let me see that we made a profit right up over here. And this is from 6:30 all the way up to 8:30. That's when I was out of the market. So I thought I hit the record button, but I did not record myself. But this is the aftermath. This is what happened. And I'm in the trenches. I'm in the trenches. So I know what I'm talking about. I day trade and I'm a life insurance broker. So that's what happened. So the market just popped up and it just zoomed through these levels. So I just ignored this level. It didn't create no reaction around this level. These are psychological levels. It passed through this level, but you can see that it came back down and it tested this level. And then it continued to go back up and then it touched this level. That's what happened. So expect the market to be in this pattern. We don't know. We got Bitcoin, cryptocurrency that can be very innovative and increase the productivity of our algorithm and our systems, right? But also just look at the US and the Japan, the yen, the JPY. So that's the heat map. So keep an eye on the yen, right? Which tells you that if the dollar keep rising while the Feds is in chaos, it is a sign of forced liquidity. This usually means a choppy day for tech stocks. So the market is very uncertain and we don't know. We can be in chop until the market start making its mind up. And we have to remember the market is between buyers and sellers in the market. But we have to have these institutional traders. They're in this market and they're able to make this market move. Because they put in money in the market. They're able to make this market move. I just don't like this little chop up here. Eventually it reached up there, but I love those big old push. That's institutional money, right? And then also too, that what we have to keep in mind is we got to address the digital twin. We got to address Tesla / the chat GPT. We have to address. But first, the digital twin and the digital twin in a predictive economy. So what's going on is that Microsoft, they got a thing called digital twin, partnering up with Walmart. So what it is, the titans, the big banks, they aren't just selling you products, right? They're trying to build a digital twin as your life, for your life, to predict what you will buy. So before you will even know it, this is the end of choice, free will, and the beginning of efficiency for their profit. So they just gonna understand data. That's why data is very important. That's why OpenAI, ChatGPT is very important. And that's why you got Meta, Google, Intel, NVIDIA, they invested in AI because data is the new commodity. We got Tesla, ChatGPT, and the AI brain. So there's a massive speculation about Tesla integrating into a more advanced machine learning algorithm technology like ChatGPT, and they're gonna integrate this into their vehicle. So the AI will be the brain, and it's gonna be like a humanoid robot. So the message is from the big banks or the titans is that Tesla isn't a car company. It is a robotic and AI powerhouse. So they are racing to put the power of ChatGPT into the physical reality, which is why their stock valuation remain in the trillions, even when the old world logic say it shouldn't. And then let's also talk about the massage non-farm payroll, the numbers versus the macro reality. So the non-farm payrolls, the NFP. So the glitch is that the headline says 50,000 new jobs, which the market celebrates because it means the Feds might stop raising rates. So the truth is that these numbers are massaged to focus on the tech billionaires and government hiring, right? So the macro reality is that in America or in places like Sacramento, we see the truth. People are being laid off, full-time careers are being replaced by part-time gig work, and small businesses are closing because they can't afford the cost of living. So why the market is high? Because the big banks and these big techs are injecting billions of dollars into these old guards, corporations through infrastructure equity. So they aren't investing in the people. They're not investing in you. They're not investing in the American people that allow America to be what America is. They are investing in robots in their pub in their public pipelines. That's what they're doing. So what I'm doing is that I'm hosting a one-on-ones. I'm hosting one-on-ones. If you can schedule a private one-on-one consultation, free consultation to get more information about this, then check in my description, or you can look me up on my socials at Omari E10 Insurance or the Black Man in the Blue Suit. But the disclaimer is that this is not financial advice. I am an educator and I'm a scout. I'm also in the trenches. So I'm learning and I'm an economist myself. So this section is only for education purposes only. So if you can understand the micro, the macro of what's happening, then let's make an informed decision for your family legacy, for your future. So stay informed, stay protected, stay wise, and I'll see you in the next video. Thank you very much.